first-time homebuyers, they hit a record low, and I got to say, I mean, I'm not overly surprised by this, considering that the high cost of housing and now higher interest rates, people are trying to get their first home, and that dropped to a record low around 23% in 2024. I mean, there's no denying it. It's hard. I mean, it seems like, obviously, mortgage rates went from sub 3, we'll call it, to now, I'm going to say 7, 8%. Plus, home prices did not go down. So now the affordability of those homes has even become more problematic.
Yeah, and these numbers that you're looking at are national numbers, but a lot of people that listen to us are in the California area, and obviously it's a lot more difficult here. I mean, the way that the state of California is set up for first-time home buyers, it's really stacked against you with the property taxes that you have to pay, the insurance that you have to pay, the high cost of living, the high purchase price of the homes, the high interest rates that you're dealing with. So, I mean, across the board, any metric you look at, home ownership, especially getting into that house, is expensive. And when you look at, how much real estate has appreciated in the past, the people that are buying the homes are the people that have had homes before. So that delta or that discrepancy between people with homes and without, canceling out first-time home buyers is just making it more difficult.
Yeah, I mean, it's really become challenging. I was somewhat blown away by these stats, but the average age of the first-time home buyer has now increased 10 years over the historical average to 38 years old. The median income is now $97,000, and the first-time home buyers are coming up with an average down payment of 9% of the value of the home. So even with older home buyers, first-time home buyers, more income, you're still not even getting to a 20% level for that down payment. I mean, it's a challenge.
Yeah, and I think as far as the down payment goes, I don't have the number in front of me, but the average down payment I don't think has ever been 20% or even close to that. But, again, these are national numbers. So in the state of California, it's probably older and higher level of income to get into this. But average home buyer, almost 40 years old and, making $100,000 a year in median income. I mean, that's a lot different than what it's used to be in the past.
Yeah, and as you said, I mean, it's really interesting to kind of see the fact that home equity has gone up so much. So then people that are able to buy homes, well, they're able to capitalize on that home equity. But if you didn't have a home, you didn't get that increase in home equity. So it's really challenging to enter the market. And I mean, we can talk about this probably a little bit more later here, but I think unfortunately you've kind of missed the boat. I mean, you're not going to have, I think, a repeat of what happened really from about 2020 to 2025. I don't think you're going to see that same type of price appreciation from 2025 to 2030.
And a lot of that appreciation was, 2020 to 2022.
Yeah.
Since then it's been a lot slowed, but you're right. I don't think we're going to see that type of appreciation unless, I don't think we're getting another COVID or something crazy like that.
I hope not.
And, looking at the age here, 38 years old, I believe just the experience that we have a few hundred clients, the people who are buying homes that are younger almost exclusively are getting help from their parents who did have appreciated real estate, and they're using that in one way or another, meaning they have other assets that they're okay parting with because they have so much appreciation, or maybe they moved and they're accessing some of that equity. Now they can help out their kids. I don't want to say young kids because they're fully adult kids many times with their own kids at that point. But so that discrepancy between having homes versus having not is, it's wide and it's getting wider.
Yeah, and I mean, it is an interesting point. And I'd say, especially here in California, to that point of needing to help your kids. I'd say we have a lot of friends, obviously, in Arizona, since we both went to school in Arizona. They've been able to kind of afford homes there because they're a lot cheaper than they are here. But here in California, yeah, I mean, even if you have a $1 million home, which is pretty standard in San Diego County, I mean, you need $100,000. I mean, that's hard to come across.
Yeah, my mother-in-law has been trying to get a hold of me recently because she's trying to find ways to help my brother-in-law buying a house, and he's, I think, 38 years old, actually.
Hey, he'll be right in line with the median first-time home buyer then. And I was going to say, too, one other thing that kind of concerns me, I guess, on further price appreciation, many of these young buyers that are using these FHA loans, which do require a very small down payment, and according to research, roughly 30% of all FHA mortgages have a debt service ratio of over 50%. This means more than half of these buyers' incomes is going towards servicing debt. And this is what concerns me from a price appreciation standpoint is you can't go from, I'm going to say 30% debt service ratio. I'm not sure what it was in the past to 50%. You're not going to go from 50 to 70 to 80. I mean, you got to live, you got to do other things, and it's going to make it hard on some of these people to go on vacation, to, maybe buy a new car. There's a lot of challenges within the fact that the debt service ratio is quite that high. Now you can buckle down and, you'll be fine, I think, long term. But it is, I think, bringing about its own challenges. And that is one reason I really see a cap on how much further housing can appreciate.
Well, as far as who can afford that.
Yeah.
And, looking at that ratio, there is only so far you can go, because the way that that's calculated, it's based on gross income. So your gross income, how much of that, in many cases now over 50% of that gross income is going to pay for housing, the debt service of it. So, you have your gross income, you pay your taxes, and then you pay your housing, and that does not leave very much less. And so even with people of higher levels of income, they're paying more tax. So, it still is difficult no matter which way that you look at it. And as far as that ratio, if you listen to Dave Ramsey, for example, his thing is, you want
no debt.
No debt. But if you are going to have debt, 20% down with a 15-year mortgage, and that mortgage has to be less than, I think, a quarter of your income, of your take-home income, which means, no one's buying a house in California.
No, I think the Dave Ramsey philosophy, I don't think works for people in San Diego that are in their early 30s.
No.
You have to make millions of dollars to be able to subscribe to that philosophy.
And eat rice and beans.
Yeah, exactly. And I was going to say one thing that is, I'm going to say somewhat positive here for, people that are wanting to enter the market is, inventory has been so tight in housing for, several years now. We did actually see 1.45 million homes for sale at the end of April, which at the current sales pace represents about a 4.4 month supply. And also, too, inventory did jump by about 9% compared to the prior month. So we are seeing more homes come on the market. And it was actually the highest supply that we've seen in about 5 years. So, we are seeing more homes come on. Sales, on the other hand, have been declining somewhat. People are a little bit slower to move, which what should then happen is inventory continues to rise. That should then, I don't think, and we've talked about this a lot, I don't see a crash in housing prices. I want to be people are like, oh, you're anti-real estate. I'm not anti-real estate. I just bought a house. I look at it and saying, housing prices, I don't think, as we said, are going to appreciate by 8% a year over the next 5-10 years. I also don't see them falling 10, 15, 20%. I think there is that floor in there because, as you said, you have older buyers that can step in, help their kids. You have a lot of people on the sideline. So the housing market, I think, is more going to be a stall out over the next 5 to 10 years, depending on how much appreciation we see. But there is, I think, some hope for allowing incomes to kind of catch back up to housing and not having the huge appreciation that we've seen. So if you're a first-time home buyer, you're waiting on the sidelines, don't become impatient. Get yourself in a bad situation. Buy a home that you hate, and then you move out 3 years later. Again, that patience, I think, is still very important here because I think the housing market will continue to normalize over the next 2, 3, 4 years.
And some of that, I think, is going to, definitely going to be influenced by what interest rates do. Interest rates have been at this level for quite a while now. And so the affordability, home prices haven't changed too much in the last couple of years. Interest rates haven't changed too much in the last couple of years. So there's this pent-up demand that's accruing. But one thing I tell people that are renting is not necessarily a bad thing. People think that, I'm a renter, I'm a failure. We rented for a whole long time. And in many cases, from a financial perspective, renting is okay. If your rent is $2,000 a month, but if you buy a house, it's going to be $6,000 a month. Well, if you're renting and if you're saving that delta of $4,000 into something, in many cases that might be good, especially if the home value doesn't appreciate. Because when you buy a house, to make home ownership better than renting, because of the extra money you're putting into it, you need appreciation to account for that extra cash flow that you're putting into it. So renting's not necessarily a bad thing. Don't rush into something that you're not ready for because, over the next, even the rest of this year and into next year, I don't see home prices appreciating a ton. I don't see interest rates falling off a cliff. So affordability, I don't think, is really going to change too much over the next 12 months or so.
Yeah, we're going to move on here, but I think the way to sum it up is I think renting isn't that bad. Buying a home isn't that bad. It really just depends on your situation, kind of where you're at. Both make sense depending on, again, what you're looking for and what you personally need.